Alright folks, welcome back to another series, but instead we're doing something a little different this time. I've spoken about manipulation templates many times before, but I just haven't taught it yet, in which I'm about to teach them now in this miniature series. There are 6 manipulation templates, okay, but I spread them out into 6 different episodes, okay, because I know, and I just foresaw, if I stuff them into one single video, it'll be a 3-hour long lecture, and it'll possibly make me tired, which is, going to make you learn a little bit harder because I'm not all the way focused. But yeah, but this is going to be in 6 different sections, so just be glad that I did this, because if I would have put them into one single video, just named manipulation templates, it'd be at least 3 hours long of me just yapping. So you have 6 different sections of this. Now, what exactly are the market maker manipulation templates? These things are definitely one of my favorite. So you just hearing that, you hearing me say that it's my favorite should really make a light bulb go off in your head, because I don't have a lot of favorite concepts. I really don't. My favorites are probably the order block, mitigation block, manipulation templates, and the break and market structure. Those are my top 4, and these are one of them. The reason these are so powerful and one of my favorites is because you can predict any day. You can predict anything in the market with these. They are that powerful. I swear to God, you're going to see that in just a second, but in hindsight, of course. But if you use these live, it is almost impossible to lose with these, especially if you use pre-market and Judas swing. There's no way to lose. I swear to God, there's no way to lose. If you use Judas swing, pre-market, and manipulation templates, you literally, there's no way you're going to get the buys wrong, unless price just acts weird and purposely consolidates before something crazy happens. And matter of fact, I have a theory to show you guys before we even get started, right? I want to show you guys something. Let me mark this. Let me give you a quick little yap session. Let me mark this and go to recent price action. So recently, if you guys haven't heard, a couple days ago from the time of this recording, I think Israel bombed Iran. They started attacking Iran. This was Thursday, June 12th, 2025. Okay. And now I want you to pay attention to this. If you were trading that week, you should understand that the market was absolutely cooked. Like, the price action was so bad. It was so terrible. But pay attention to how price is acting in this range right here. Now, you're probably like, there's nothing really going on. If I go back to when the tariff started, to where just certain crazy stuff started happening, you will notice that price will start acting weird and will consolidate before, that random, quote-unquote, random event happens. Because this right here, this was supposed to be random. This drop here was supposed to be random. Supposed to be. But according to the market, it wasn't. Because look what happens. The whole week before Thursday, or the whole previous days before Thursday, Wednesday, Tuesday, and Monday, it consolidated the whole time before Iran got bombed by Israel. And then the market just tanks. The question is here, if it was so random, how does the market just know to consolidate before this happens? How? That's just my theory, and it's been getting proven multiple times. Multiple times. Every time something dealing with tariffs recently, there was always some consolidation that was just right before it. I don't understand why, and I think this is proving my point on how the market is even more rigged when it comes to like economic stuff, because there's no way this is random. Just pay attention to this. Price is accumulating sell side, right? It's accumulating. Overall, it's consolidating. I'm sorry for yapping, but I just have to get this off my chest because this is crazy. Price is accumulating, right? But how? It's purging buy side liquidity, like continuously. It keeps doing it. It's not stopping. But while it's doing that, it's accumulating sell side. Okay? Now, watch this. After it's done, or right before Iran gets bombed by Israel, price creates a break and market structure, comes up into the mitigation block, and then guess what? The bombing occurs, price respects the mitigation block, and exits the consolidation range, purging all the accumulated liquidity that was built up, before the bombing happened, or before the attack started happening. So you should probably get what I'm saying here. How in the world was the market so calculated before this quote-unquote random event occurred? Because if this was random, price was not supposed to do this. If this was, I guess you could say flash news or something that was like a flash, flash news. I don't know what the word is. Breaking news. I think that's what it is. Breaking news. If this was some breaking, flash, or random news, price should not have been so calculated. It should have just been in la la land, just doing what it normally does, right? But as you can see here, that was not so random. This whole thing was calculated. So what I'm trying to say here is the market is rigged, and everything that happens economically is planned. There's no way. There's absolutely no way. And this is kind of crazy. Hope this video might get taken down just for me saying this, because YouTube is just weird like that. Hopefully they don't. But if so, I'm gonna edit this out and continue with the video. But the fact that this happens right before the attacks on Iran start happening is absolutely mind blowing. I'm sorry, I just had to get this off my chest, but hopefully that just opened your eye a little bit more. And matter of fact, you can go back test. Go to each date on where some sort of random or breaking tariff announcement was announced, and you'll see exactly what I'm talking about. You will see exactly what I'm talking about. But anyway, let's go ahead and get into this example after me yapping for such a long time. Here we go. Like I said, well, I don't think I have said it because I was yapping so much I don't even remember what we were going over. Well, we're going over manipulation templates, okay? The first manipulation template out of the 6 is going to be the classic Tuesday high or low of the week, okay? We're going to be going over 4 examples of this, okay? 2 low of the weeks, 2 high of the weeks. The first example being the high of the week. So we got Monday, Tuesday rallying, Tuesday creating the high of the week, hitting some sort of liquidity pool or high time frame away. I said away. Wednesday dumps, Thursday dumps again, and Friday retraces. Sometimes Thursday won't always dump. Thursday can also make a vicious retracement and send Friday into a consolidation. So keep that in mind. All right, let's do this, shall we? Here we go in our chart, right? Let's go ahead and analyze the days. Let's go ahead and get a clarification on what happens within, all these days. Monday here, I don't know why the indicator does that, but it starts the time at 9:30, in which I don't really mind, but yeah, it doesn't really matter. But it starts at 10, the Monday indicator down here. And on Monday, price rallies and, it has a little miniature consolidation. That miniature consolidation makes Tuesday go up even higher, creating a Tuesday high of the week. Now, you're probably like, okay, we're looking at this, but how in the world do we predict that all this is going to happen? Just wait. I'll show you that in hindsight in just a second. I'll show you how you can predict every single one of these days very precisely. It's not hard, but I'll show you. Just give me just a second. Let me turn my phone's ringer down so I won't get a call and it won't destroy the whole video, because it's happened like over 30 times. But anyway, this consolidation occurs after Monday's rally. We send Tuesday higher, creating that high of the week. Price does it very slowly, so it won't exhaust itself for the rest of the week's price action. So we have a very slow rally for Monday and Tuesday. Tuesday creating the high of the week. Wednesday has that break in market structure right here, confirming that we want to, see lower prices. Wednesday, it dumps, completely sharts its pants. It just drops lower. This crazy dump sends Thursday into a consolidation, okay? Now, like I said just earlier, after Wednesday's dump, Thursday can do a couple things. It can retrace, it can keep dropping lower, or it can consolidate, okay? Now, if it consolidates, Friday is going to continue lower. Does it do that? Yep, and it does it viciously. If Thursday retraces viciously, okay, so if Thursday, for example, if you're using TGIF, this is where you, if you know about TGIF, you can do this. Wait, I had it wrong. Let me delete that real quick. But is it like, did I drop from the low to the, okay, it's like this. But if Thursday retraces up to 30% into the range and closes above the 30%, above the 30 percentile of the entire weekly range, then it's going to send Friday into a consolidation. But if Thursday keeps continuing lower from Wednesday's, from Wednesday's rally lower, then it's going to send Friday into a consolidation or a retracement into the weekly range, okay, which will give you that TGIF setup. But in this case, Thursday consolidates, and it consolidates lower, very, very slowly, which sends Friday into that, continuation lower and continuation lower, and then even more continuation lower. So it's nothing too crazy. Now we're going to analyze every single day to see how we could have predicted this, okay? Now, first, let's go ahead and jump into the 4 hour, and before I do that, Let me see, this is Tuesday, March 25th, 2025. So we're going to jump to the 4 hour. And what did I say, guys? March 25th, I think that was. Yep, Tuesday. So there we go, March 25th. And I wish this indicator was a little lower, like at the bottom of the screen, so it won't be in my way. But it's okay, it doesn't really matter. So let's analyze and see what happens here. Let's really pay attention to see what happens here. So we're going to delete this line because our setup is right in this area. If I can get like a little tool to draw or something to draw. But yeah, this is our example. It's right on here. Okay. Matter of fact, let me pull out my demonstration tool. There we go. Okay, that's nice. So let's go ahead and look around and see how we could have predicted every single thing, every single day within that manipulation template. First, we have to look on our higher time frames. So one, we have sell-side liquidity resting below here. And what does price do to equal lows? It's going to seek it. Why? Because it's the smooth side of the market. And guess what? We have even more equal lows down here. Oh, wow. Great, isn't it? Yeah, I know. Absolutely amazing. So we have some more equal lows down here. If you notice, we have a original consolidation right down here. So I guess we can mark it like right here. We have an original consolidation. Uh-oh, what is Joshua about to talk about now? What is he about to say? Well, we have an original consolidation right about here. And then we leave that original consolidation to, deliver buy side. Have some buy side delivery, you know what I'm saying? But after we deliver buy side, where do we go? Like, what do we touch? Do we touch anything? Do we hit anything? Well, one, we have this reclaimed fair value gap right here. See that? Yeah, very interesting, isn't it? So we have this reclaimed fair value gap. Why is it reclaimed? Because the whole bearish narrative hasn't panned out yet. Well, that's if this was live, but obviously in hindsight, you get what I'm saying. But this is a reclaimed fair value gap, and then we came above this short-term swing, purging it, having a liquidity purge. And then if we include our mean threshold, but consequent encroachment, and drag it across, we can see that price respected it literally right on this point. If you can see, we have the respect of the consequent encroachment of this reclaimed fair value gap. We have a liquidity purge, and then we have that break and mark structure right here. So we can clearly see that price wants to go lower, okay? And then we have this market maker sell model having that original consolidation, and then that buy side delivery up to these levels, in which our sell side delivery should occur around here, correct? In which it does. Okay, so we already have our confluences. That price is going to go lower. Okay, so if price is going to go lower, right? But let's just put this all together real quick. Everything that we just saw. Mind you, let me say something real quick. Mind you, this isn't everything. This isn't everything on the chart. There's obviously more, but with just the stuff we have, let's put it together. One thing we have is we're in the buy side delivery of a market maker sell model. So what does that mean? Price is manipulating higher. If price is manipulating higher, right, and we're in a market maker sell model, that means price is bound to go lower, right? When is it bound to go lower? Like what is it manipulating to, and why is it going to go lower? When is it going to go lower? Well, price is delivering buy side. Okay, it's going. But as it's going higher, it's leaving sell side. Equal sell side. So that's giving us even more evidence that, okay, price is going to go lower after this buy side delivery is done delivering. As we are delivering higher, we reach this reclaimed fair value gap. We respect its consequent encroachment, and we also purge this short-term high over here. Now, when we purge this short-term high, do we go above it? We do a little bit, but do we like rally through it? Nope. And when we hit the consequent encroachment, do we rally through it? No. So what does this indicate? This right here indicates that this is a point that we can expect price to reverse at, because there's a lot of stuff going on there. And then we even have the confluence of just price manipulating in general. So we understand that this is manipulation, and that this could be the end of the manipulation. You get what I'm saying? So what I'm saying here is, if we were there Monday right here, right, and we're like, okay, we're in buy side delivery, so since price is going to manipulate, right, and the obvious order flow is bearish, price is going to manipulate higher temporarily to continue lower, right? So we can expect, if we look at our manipulation templates real quick, we can expect a classic Tuesday high of the week to form, because since we're on Monday and we're reaching a PD array or some sort of reference point, we can expect Monday and Tuesday to rally higher as manipulation continuing the buy side delivery for that market maker sell model to then reverse around Wednesday and continue lower to deliver the sell side delivery of that market maker sell model. You can replay that whole thing, everything I just said, but hopefully I made it make sense. Okay, and I know I'm talking a little fast, in which I think I'm just, I probably had a Red Bull in my sleep. I don't know what's going on, but I'm very energized. Normally I'm not this energized when I'm talking. But let's go ahead and drop back down to that hour, shall we? Wherever that example is. Wow, okay, it's all over here. Here we are. So this is where the sell side delivery begins. We have our break of market structure right here. How nice, confirming that we want to, deliver lower. Wednesday drops as expected. So we're like, okay, everything's panning out. So now that we see Wednesday drop, we're like, okay, the classic high of the week has been initiated. It's begun. So we can expect Thursday, since we've had such a large rally, which was over 470 points or 450 points, we can expect Thursday to either retrace or consolidate. That's the two things we can expect, because I don't think we want to see price continue lower after such a large drop lower or large swing of sell side delivery. We wouldn't want to see that, right? Because it's just common. When price expands, it's going to consolidate, especially if it's a large expansion, in which it was. And we were right. Thursday consolidates. So like, okay, how does it consolidate? Like, what is it doing? Is it consolidating higher, making that 30% retracement so it can send Friday into consolidation? Or is it just consolidating lower and or sideways so Friday can continue lower? In this case, it consolidates, lower. Okay, so that can send Friday. We can expect Friday to continue lower since Thursday was in a consolidation. I'm so sorry for talking fast. I'll slow it down in just a second. And we were right. Friday does indeed dump and continues dumping and continues dumping. If you want to see how large that dump truly was, sure, I'll do it from the end of Friday. So we're going to do it like right here, if I can do it all the way. Yeah, that's over 700 points. Dude, that's over 700 points. It's amazing, really. But this is the power of manipulation templates, and especially if you become versatile, or some people say versatile or versatile. I like saying versatile. It just sounds better. But if you become versatile with your analysis and you think ahead, then this is what manipulation templates are going to have you do. They're going to have you look ahead. They're going to have you think like, okay, if price is going up and it's manipulating higher, as we can clearly see, and an order flow is bearish, what manipulation template could we expect? What could happen? What could happen? And you refer to all 6 of your manipulation templates and see what could possibly happen based off of what you think. First is based off of you. It's based off of you and what price is actually doing. That's the first thing. The second thing is based off what price is doing, what manipulation template could you expect? How could you predict each day of this market and actually trade it? Look at your manipulation templates. What is the highest probability manipulation template to occur that week? It's nothing too crazy. That's all the steps. It's nothing too insane. Okay, so this was our first example. Was it simple? I mean, I think I taught it simple, but hey, it's all up to you. If you absorbed it well, if I taught it well, and that's just that's all up to you. So we're gonna delete all of our drawings. No, all of our drawings, all of our hard work, they're gone. Anyway, next example, wherever that is. How far did I go? I must have went far. What the? Wait, hold on. Oh, I'm so slow. Hold on, guys. I'm such a goofy. Wait a minute. I didn't even realize that I cleared all the drawings, so it erased the lines at which I there we go. Okay, so what I have to do is just get rid of this. I'm gonna get rid of all this, and then my lines back here should pop up. There we go. So here are the examples. Here's another high of the week, but I don't think I want to make this a demonstration, not demonstration, but this teaching too long. So, yeah, I think I might leave this one out. Or I might just add another high of the week just to have some fun, because these lectures deserve to be a little long. But here is a low of the week. This is what I was looking for right here, okay? So, before we even jump into this, because I made a mistake already, but before we even jump into this, let's jump to our 4 hour, okay? We're not going to go too far, but let's jump to our 4 hour. And go to that same setup, wherever that is, which is right along here. Here it is right here. So let's go ahead and look and see what's going on overall. We can clearly see that price is bullish. Price had a vicious retracement, a couple months before, hitting a 4-hour fair value gap and purging sell side before having a break in market structure back higher, hitting this fair value gap, and just having bullish order flow. So we had a shift in we had bearish order flow here and then bullish order flow. So we are in bullish order flow. But in recent times, what is happening? Well, you can see earlier before we hit this actual liquidity void. This is an actual liquidity void because within this closing price and within this candle's opening price, there was literally no orders within that area. This is why this is a true liquidity void. There was absolutely nothing going on there. It was nothing, and that's what a void is. You can call this null. You can refer to this as null. If you don't know what the word null means, we can search it up right now. Null. Where in the world null? Having or associated with the value of 0. Okay, basically nothing. That's what it basically means. Absolutely nothing. Yeah, 0. No signal. That's what null means. Basically nothing. Okay, that's what it means. If you wanted to know what that means, that's what it means. Okay, let me turn my volume down because this is getting into the mic, and this mic is very sensitive. So yeah, we hit this true liquidity void and respected it pretty nicely. If you want to add some quadrants to this, to the closing price, to the opening price, I clicked that. We hit the upper quadrant multiple times, closing above it and not hitting the consequent encroachment or the main threshold of this true liquidity void, showing that we want to go higher, right? And price indeed does go higher. We purged sell side liquidity right before going higher, so it's like, okay, yeah, we really do want to go higher. Now, let's look into what's going on here. What is going on right before the new week opens, or right before our current week we're in hindsight, really. Price has a retracement lower and hits this very, very small, but a critical fair value gap. It hits it and somehow has a institutional order flow entry drill, which is really insane. If you draw the add consequent encroachment, you can see that it didn't even, matter of fact, it didn't even hit the upper quadrant. Yeah, it literally didn't even hit the upper quadrant. So that is an insane amount of respect for such a tiny fair value gap on such a large time frame. So we can clearly see that price really does want to go higher because we have low resistance liquidity runs going on. It's just absolutely amazing. So we can say that price wants to go higher. But how? Well, let's check our manipulation templates. Let's check real quick. How is price going to go higher? Let's see. So let's go to our classic Tuesday low of the week. We can see Monday drop lower, Tuesday drop lower, Wednesday drop higher. I said Wednesday drop higher. Wednesday rally higher, and Thursday keep going higher, and then Friday retrace. But how are we going to expect this? This is just one. We have to go onto the hour and see what's really going on. Let's check that real quick. Let's check. So we're going to drop back down to the hour. What is this? September 23rd. Okay, so we're going to go to the hour. Then we're going to go all the way back to September 23rd. There we go. Here we are. So we have made it to September 23rd. How nice is that? All right, so let's look at Monday's price action. Okay, we're going to go ahead and delete this line since we know where we are. That is that institutional order flow entry drill down there. We have a fairy swing of this short-term low, showing that price wants to go higher. Price rallies back higher, creating a break in market structure. How nice is that? Pretty nice, isn't it? Price hits this mitigation block, continues higher, which is what initializes that break in market structure. Price has a vicious retracement lower into optimal trade entry levels. If you want to add that, boom, pretty nice, isn't it? Into the optimal trade entry levels down here. After we do that, Monday opens up. This is the day Monday, the first day of the week. It opens up. Now, what does it do? It consolidates. People are like, okay, but isn't it supposed to drop lower? Not necessarily. Monday can consolidate. Why can it consolidate? Because it can build up orders for Tuesday. So Tuesday can start, setting up and doing the low of the week, and begin delivering for the rest of the week's price action. That's what Monday can consolidate for. That's why some people say, do not trade Mondays on no news, which makes a whole lot of sense, doesn't it? Makes a whole bunch of sense. So since we know that price is ready to go higher, and it's already done its retracement, it's already done its manipulation, it doesn't need to do too much, does it? it doesn't have to do too much. The only manipulation that's going to occur is during Tuesday, right? Which is what we can see right along here. I love that feature. I'm going to show you guys my PC setup at the end of the video, maybe. But this feature, I can just double click control. It's amazing. But anyway, when Monday consolidates, but how does it consolidate? We build up sell side. Whoa, you see how equal that is? I know, absolutely amazing, isn't it? It builds up sell side for what? For Tuesday to manipulate it. So like, okay, Monday, since Monday consolidates, since Monday accumulates sell side liquidity, we can see Tuesday manipulate lower into the sell side liquidity to deliver higher, which is our expected buy, to deliver our to deliver higher, which is what we expected. And if we look at Tuesday, price does exactly that. 9:30 kicks in at this candle, manipulates higher temporarily, comes down, completely purges all sell side down here. So we now reference this as a sell side liquidity purge. And then we even come down here to this short-term low and purge that, which is absolutely amazing, isn't it? So if I can mark that as liquidity purge, there we go. Tuesday comes down, manipulates all sell side liquidity, so that shows that price wants to go higher. But after purging it, we immediately pull back up. So that's showing a pretty good willingness to go higher, doesn't it? Right? After doing so, we have a break in market structure here, and we also have a disrespect of this mitigation block. You see that right here? This candle is a mitigation block. We have a disrespect of it right here. And mind you, why am I highlighting this? If you know, the mitigation block is the strongest, and basically it has the highest level of importance out of all the PD arrays. It's the strongest PD array. Okay, it's the one that the algorithm, I guess you can say, takes heed to the most. And if it does that, and we have a disrespect of it, does that mean price does not want to go lower? Yes, because the mitigation block is bearish, and it completely was just like, no, I don't wanna, and it just ran through the mitigation block. Absolutely amazing. So that's another confluence right there. The fact that we manipulated and pulled back up so viciously was already one, but the fact that we ran through this mitigation block, the strongest PD array, very aggressively, just shows us that price really wants to go higher. So now we can expect the manipulation template to pan out. We can predict every day. We can predict every day of the week effortlessly. And I've been talking so much, I'm starting to lose breath. Give me a couple seconds. Oh man, a lot of explaining, a lot of teaching. We've been talking about this for about 28 minutes now. I think, yeah, it's about the 28-minute mark. It says 27 minutes and 58 seconds on my screen. But yeah, we've been, not we, but I've been talking for a long time. So appreciate it, please appreciate it, because I'm doing whatever I can to teach you people everything that I know. So Tuesday, it doesn't really deliver, but it just initializes or begins the buy side delivery by manipulating Monday's sell side and having that bullish break in market structure up here. Pretty nice, isn't it? So it just what's the word? It sets the tone for the market. The Tuesday just sets the tone for the market. Okay. Wednesday kicks in, and we have a retracement to the equilibrium of the of this displacement range right here, and we don't push through it. If you want to see, we do not displace through the equilibrium, showing some respect. So we can say that Wednesday wants to go higher, right? Because we just have a lot of confluences that it wants to do that. Wednesday opens up at 9 a.m. or 9:30 and shoots higher. Has a quick little, miniature retracement into this order block once again, and then continues higher. Pretty nice, isn't it? But we also have a breaker right there. You see that breaker? That's that breaker. So it opens up, sends price higher, sets the tone for price right there on this candle here. Comes back down, hits this breaker right here. What does it also do? It also violates this mitigation block again, telling us that price wants to go higher. Okay. Sometimes you're not going to have all the confluences in the previous day, so it'll either give you enough information during that day that you expect it to go up, or you will just have it in the previous days, such as Tuesday and Monday. But in this case, we already had that, but we just gained more information during Wednesday, okay? But we deliver higher at 9:30. Oh, what the word? You can do that? Oh, wow, that's actually pretty cool. Whoa. Okay, that's nice. I don't know. I keep figuring things out and it's blowing my mind. Every time I'm teaching, I just accidentally click a button and it just shows me something absolutely amazing. But we tap this breaker once more during, what time is this? During the lunch macro. So we retrace during the lunch macro to continue higher, in which we do. And even after the market closes, we still keep rallying and keep rallying and keep rallying. Why? Why do we do this? Because all of this was just initializing the buy side order flow. We didn't really deliver it. We didn't deliver the buy side. So price is going to deliver the buy side. Period. It's not going to wait. It's waited a little too long. You know what I'm saying? It's waited a little too long, and it delivers this all during Asia. Pretty crazy, isn't it? I know. Yeah, it delivers this all during Asia. Okay, now this is where we need to analyze this right here. This is where we need to pay attention. Or how do I draw with this? Just wait. Oh yeah. Oh, right here. This is what we need to be paying attention to. This move right here. The fact that we had such a large rally right after Wednesday's close. Let me analyze this. Had a 300-point rally right after Wednesday's market close during Asian session. This could send Thursday into two things. It could send Thursday into a consolidation or a major retracement. Why? Because it rallied 300 points outside of our primary session. Okay, our primary session, which is New York, should do this, right? So Thursday is going to be like, oh no, we got to rebalance that. We have to rebalance that. We either rebalance it or we accumulate after doing such crazy price action. And Thursday, it decides to drop lower. Absolutely, it's cinematic, isn't it? Absolute cinema. Okay, Thursday opens up at 9:30, and if you notice, you have this miniature consolidation before then, purging this buy side liquidity right here. There's just little minor buy side liquidity purge, but 9:30 comes in on this candle and retraces majorly. Okay, why do I say majorly? Let's get the low of the week to the high of the week and see where in the world. Oh, let me redo that. And look for on TGIF, see how far it retraces. It retraces to and through the 30% the 30 percentile of the entire range, going all the way down to, I think, 50%. Let me turn on the 50%. Where's it at? If I can even get it. Where is 50% at? Wait, here we go. Yeah, it literally retraces 50% of the weekly range. So what is that going to do? I just told you earlier. Can you say it? Can you say it? Maybe. I don't know if you're saying it, but hopefully you are. It's going to send Friday into a consolidation. Right? Are we agreeing on that? I think we're agreeing on that, right? If we have such a crazy retracement on Thursday, right, past the 30%, all the way to the 50 percentile of the weekly range, that's going to send Friday into a consolidation, right? Well, let's see. Yep, it does. How amazing is that? Friday opens up, has a little rally lower, but it consolidates. So our point was proven. Okay, we were right. Every single day we predicted correctly, and it worked. Okay, this is just the first manipulation template. There's 5 more. Remember that. There's 5 more. And I'm gonna say this to you before I end the video because I have to warn you. There's 5 more manipulation templates. Yes. Do not. When I say do not, you can try. I'm not saying don't do it. You can, but it is going to be a little hard to memorize these manipulation templates because there's like over 12 of them if you include the bullish and bearish statuses. But don't try to remember them. Have some sort of notebook to where you can refer to them and say, okay, price might do this, price might do that. Don't try to remember them because I've known these for like 6 months and I still can't memorize them. Okay, I still have to pull up a whole image right here just so I can remember it and so I can teach it to you efficiently. Okay, that's just something I had to say to you before I end this video. Okay, but you don't have to remember them all. Matter of fact, you probably won't be able to. You can probably remember just up to 3. You can. I'm not gonna say you can't. But hey, don't beat yourself up if you can't remember all 6 at once, okay? Because not even I can do it. And I have to admit it, I really cannot remember this. You can show me a manipulation template and say, what manipulation template is this? I would not remember. I would not know, okay? I still have to refer to my my notes in my Dropbox paper my Dropbox document to see, like, okay, price might do this. I have to do that. So don't beat yourself up if you can't remember them all, okay? But anyway, I'll be in this video here. Well, this first episode of the manipulation templates here. And yeah, I'll see you guys in the other 5, which will most likely be recorded in the same day because I got nothing else to do. And I'll see you guys in the next one. Good luck and good trading.